Two people invest in the same stock, same year, same market. One makes money, the other loses everything. The difference was not intelligence, it was understanding. And today, you'll see why most people, including very smart people, completely misunderstand the stock market. If you think the stock market rewards hard work, intelligence, or good intentions, this video might quietly change how you see money forever. Because the stock market is not what most people believe it is, and that misunderstanding is why millions of people participate, but only a few consistently win. Let's start with a simple truth. Most people believe the stock market works like this. You study, you analyze, you pick a good company, and over time, you make money. That sounds logical, it sounds fair, and it's exactly why it fails. Because the stock market does not reward effort, it does not reward intelligence, and it definitely does not reward emotions. It rewards one thing only: behavior under uncertainty. Let me tell you a very common story. Two friends, both earning well, both smart, both investing. Friend A checks his portfolio every day, reads news, watches prices move, reacts. Friend B barely looks. He understands one thing: volatility is normal. When markets fall, friend A feels fear. Friend B feels nothing. 5 years later, friend A says, "The stock market is risky." Friend B says, "The stock market is boring." Guess who made money? Here's where the misunderstanding begins. Most people think a stock is a ticket to profit or a number on a screen. In reality, a stock is shared ownership in uncertainty. You are not buying certainty, you are buying expectations about the future. And expectations change faster than reality. That's why a company can be doing well and its stock can fall. And that's why a company can be struggling and its stock can rise. Price is the loudest thing in the market, but it's also the most misleading. Price moves because people change their minds, not because companies suddenly change overnight. Markets don't ask, "Is this company good?" Markets ask, "Is this better or worse than expectations?" Most investors don't lose money because they chose bad companies. They lose money because they misunderstood price. Your brain is designed to survive, not to invest. Fear tells you to sell when prices fall. Greed tells you to buy when prices rise. The market knows this, and it quietly profits from it. This is why the average investor buys near the top and sells near the bottom. Not because they are stupid, but because they are human. Successful investors don't see the market as a casino. They see it as a long test of discipline. They don't ask, "Will this go up tomorrow?" They ask, "Can I live with uncertainty without reacting?" Once you understand this, the stock market stops being scary. It becomes predictable, not in price, but in behavior. This channel is not about stock tips. It's not about hype. And it's definitely not about getting rich quick. It's about understanding how markets actually work, so you stop fighting them and start thinking differently. In the next video, we'll talk about something uncomfortable. Why smart people lose money in stocks. And once you see it, you won't unsee it. If this made you think differently, subscribe. Not for predictions, but for clarity.